I didn't go to that workshop. I wish I could, but I didn't go to that workshop. I wish I could, but I'm going to be the inner circle trader. And now I am. Everything that I was trying to mess around with to do these superhuman feats of accuracy. See, that's one of the things that if you go through those books, like me, I was waiting on bated breath, waiting for them to teach something that no one else would teach you, that you would never find anywhere else. Because they did an interview with this guy, Jack. He or they would divulge some secret concept or approach to getting in there and finding a secret move that no one else could do. And while each new interview, I was waiting for one of them to step forward and do that. At the end of the book, I forgot about it because I enjoyed the dialogue between Jack and these individuals talking about their experiences. Some better than others. Obviously, there's a few of them in there that I wasn't really all impressed with, but everybody's going to have their own opinion about, just like they have opinions about me and I have opinions about other people. Opinions are like everything else. Like, everybody has it, but who gives a shit, really. But at the end of the book, while I was thinking about how I enjoyed it, it got me thinking about how I went into the book with something else. Something else put me into that book. It was the title, Market Wizards. It was a great title. Great title. And while it didn't deliver on my initial expectations as a trading book, even though, yes, I read the dust cover and it was interviews with traders that did well in the industry, I was expecting, just like some of you now, every time I do a video, you're expecting some new technique, some wizardry. And what I've learned over the years is that while I was a younger man expecting other people to share their secrets, their market wizardry, their price chart alchemy, they really didn't do it. They really didn't deliver any of that. They just talked about what everybody else talked about. And I was expecting someone to do a better job on spinning the retail stuff that everybody sees. And every single time, a new book, a new course, a new something or other, it would be the same boring bullshit. Wouldn't get anything new from it at all. And then I started pursuing my own studies. And I started thinking to myself, okay, and think about this as I ask you this question. If you've never thought about it, think about it right now. If there really were market wizards, traders that were able to do things that were just a cut above everything else that you'd seen before, something just really separates what they do from everything else, what would it look like? Well, I got to thinking when I was coming up, like a superpower. My sons, when they were growing up, and my youngest still, he's a little bit slower than the average person. I mentioned he was harmed by a vaccine when he was born. And while he's not terribly slow, he's noticeably slower than the rest of my kids. Bright child, very artistic, very creative, but he's slower academically. And sometimes he still talks to me like a little kid. And he'll ask me, he'll say, Dad, if you could be a superhero, what superpowers would you pick? It's almost like he forgets that he asks me this question. Every 3 or 4 months, he'll ask it, and I'll tell him, something different, because I know he's asked the question before, but I want to treat it like it's a new conversation and a new opportunity to, broaden his opinion about what it is that we're talking about. So, because of that conversation with my youngest son, it made me think about this tonight, and how I came up learning these things, developing these things, being inspired by how these markets really book price, and really taking a step away from what everybody else and what I was introduced to, like everybody else is. You read the same stuff. Everybody looks at the same thing, the same books, the same strategies, the trend lines and all that stuff. And there are people out there that make money with that. Absolutely. But my opinion, and this is simply my opinion, it may differ with you, and you may not agree with what I'm about to say, but just because someone makes a lot of money, I don't really think that makes them a market wizard. It makes them an extremely profitable trader. Absolutely. That's skill. That is absolute skill. There's no denying that. But I don't really see that as a market wizard. To me, that conjures up ideas of precision, accuracy, foresight, higher strike rate than the average trader, knowing not to go into areas where it's not likely to do well, where other traders that are extremely profitable, they'll take more losses because they're comfortable with taking losses and they're comfortable with coming out of drawdown. Whereas, in my opinion, a market wizard would be abstaining from that and knowing when not to do those things. So when I was a younger man, I made a list of things that I wanted to really focus on. One of them, obviously I mentioned this many times in passing, and if you're a new listener, I'll just toss it in here because you may not have heard it yet, but you probably will if you go through all the stuff that's on my YouTube channel. But one of the first mentors to me, and I've never met this man, so please don't bother him like other people have done, but Larry Williams, I purchased everything that man put out when I was a younger guy. Whatever he did, I bought it. If he had an article that he did, wherever he did anything, I got it. He was like my Babe Ruth, he was like my Rocky Marciano, my Muhammad Ali. He was the person that I aspired to be like. I wanted to be like him. Not in the sense that everybody looked up to him because he took $10,000 to $1.2 million in a year, but because he had tools that I felt were market wizardry. What tools am I talking about? Mostly what he has written in his book, How I Made $1 Million Trading Commodities Last Year. It's a 1970s book, but 75% of that book is still relevant today. I don't subscribe to the lunar phases and all that bullshit, but all the other stuff, the chapters that he dubs his $1 million tools, they absolutely are exactly what they are titled. If you're a commodity trader, that stuff still works. Most of my understanding of what a mega trade is comes right out of that book. And what I've done is I've heard him in his lectures and his keynote speakings and everything that he's ever talked about and taught on. And wherever that man said he had a difficulty overcoming this, or he tried this, it didn't work for him, so therefore I used that. Well, if he couldn't do it, let me see if I can go in there and figure that out. Because I've always been a person that loved puzzles, jigsaw puzzles, crossword puzzles, word searches. That's how my mind thinks. I'm extremely analytical and I'm obsessive. So if I hear someone say they have a issue and I have an affinity for them, my whole point of doing it was I'm going to fix this problem for them and I'm going to share it with them. And they're going to appreciate me because I've done it. That was my 20-year-old mentality going into most of what I was trying to do as an initial trader, trying to figure out these puzzles. And one of his lectures, he mentioned how it was a short-term trading. I don't want to call it a workshop. He was standing up on like this stage and he was just talking to to traders and such, and kind of like an auditorium event. And it was on the topic of short-term trading. And he mentioned how he had no real understanding how to figure out how to buy at the low on bullish days. He would always buy on strength. Most of everything he did, all of his trading systems were buying on strength, buying on strength. If it opens below the previous day's low and it rallies up 20% of the previous day's range, he's buying strength. Well, that's, to me, that's chasing price. And that's why he has these really large stops, $2,500 per contract. That, to me, you know, that's a lot. It's very forgiving when you are very confident that you think it's ultimately going to go a certain measure of handles or range. But I never felt comfortable with that. I tried very hard to use his mechanical systems and his rule-based ideas, and I couldn't make none of that work. It didn't fit with me. And to me, it highlighted this need to be a market wizard. I wanted to be what that title, Jack Swagger's book, I wanted to be that title in flesh. Now, I didn't tell everybody what I was trying to do, because if I told everybody what I was trying to do, they would have told me that I'm wasting my time, or they wouldn't even understand it. Because, you know, most people, unless you are a trader, everyone we tell when we say we're investing and trading, day trading, right away they know you're off your rocker. There's something different about you. You're eccentric. That's a nice way of saying you're fucking nuts for wanting to risk your money like this. You have to be a special type of person to believe in yourself doing this and making money. The average person just can't do that. So you should feel good about yourself because you're cut from a different kind of cloth. And when I was younger, I knew that about myself. I knew, even though I felt overwhelmed when I would blow my initial accounts and I was frustrated because I wanted to just work right away, I'd go back to my notes and think, okay, what is I'm trying to do? Where am I going to focus? And I wanted to come up with these approaches that would zero in on very specific turning points in the marketplace. Because I knew, because of my personal losing trades, my stop loss would many times be the very turning point and the market would go the other direction. And I'm thinking to myself, okay, if this is a net sum zero game, every loser, there's a winner on the other side of it. Okay. How on earth can I be using everything in these books, going from system to system, using everything? I followed these rules. I followed them. And they didn't deliver. So it made me wonder, if I'm this inconsistent as a new trader and I'm doing the same things over and over again, I need to come to a point where at the moment I feel like I need to be doing what these books tell me to do, I need to stop right then and there and flip the script. If I feel like I have to be a buyer based on that bullshit that I was looking at all those books and trying to utilize, stop. Look for what would exist at the opposite spectrum at that very moment. What signatures in price action would I see if I'm ready to take that trade, if I am committed emotionally and psychologically to follow the rule-based ideas that these retail concepts are supposedly teaching us? At the very moment that I have committed, that I'm about to take the trade, then I have to stop. Turn everything upside down, quite literally. And then look for what it is in the chart at that moment. And that is exactly what I was doing on America Online when people were watching me on that message board run up trade after trade after trade, calling everything in advance and Anybody that would have did trade for trade, everything I said, would have done $90,000 in 1 month without any pyramiding. And that's what got my attention, or that's what got everyone's attention, and started me doing things with precision. Every single person that's came to me has come to me by way of seeing something I've done, or you were shared a video of me executing on something. And you noticed that that's something different. That's different. Sure, people buy and sell, they make money, it's wonderful. But they're not doing these same laser guided entry points, pyramiding and building up and building up and building up and going right to the same thing all the time. Targets filled, targets filled, targets filled. You're not seeing $15,000 max loss days in the same week multiple times. You're seeing levels, thought process, narrative, walking you through every individual candle, and the logic that it should deliver to. And it goes against everything that every book that I've ever purchased tells me. So I sat down, and the first thing I figured out was my Power 3. Larry Williams says he couldn't figure out how to buy below the opening price on bullish days. Nothing he had allowed him to do that. That's his words. Was he lying and he did it, surreptitiously in his personal trading? We got to take him at face value. He said he didn't. And that's what I did as a 20-year-old. He says he didn't. So that was a personal challenge to me. I'm going to conquer that for him. He was my hero. I wanted to do that and say, here, look, here's my contribution for producing all this material, who at the time, as a young man, I felt like he did this just for me. Like all the planets aligned. This was the answer to prayer, much like what all of you say about me. I was in awe of his works, his books, everything he did. I was not that impressed with his $10,000 to $1.2 million. I was not impressed with that, because I understand that that is absolutely nuts. That's not trading. That's gambling with charts. That's what that is. Anytime you're competing in a competition like that, the only thing you're showcasing is your ability to gamble. Now, if you want to have a competition where precision entries, lowest drawdown, accuracy, then absolutely, that's a trading competition. That's where world-class precision would shine. Because anybody can get lucky over leveraging accounts and doing dumb shit. If you've ever traded long enough with live funds, you probably experienced a run where you kept doing something too much leverage, too high of number of contracts or positions in Forex or shares in a stock. And you had this windfall victory. And you think to yourself, shit, if I could just do that like every other day, unrealistic expectations. So trading competitions, while they're wonderful, they're very entertaining, they're not really showcasing trading skill, because anybody can over leverage on one windfall price run. And Larry Williams even said that about himself in 1987. He caught a good lick in the marketplace. That was his exact words. So I never looked at that and said that was an inspirational thing to me. I mean, I have to recognize it. It's the longest standing record in Robin's Cup. No one's ever come close to it. But I was more impressed with his tools, how he utilized open interest and how he looked for accumulation and distribution. And his accumulation distribution formula, while it worked a lot as a commodity trader, I saw it, it was there. It made me think about measuring accumulation and distribution, whereas I never would have ever considered it had he never brought it up in his teachings. So it brought this insatiable desire for me to go in pursuing how to track these smart money traders. When I came up with smart money concepts, just like my name, Inner Circle Trader, Larry Williams as my initial mentor, and I call him my mentor because I subscribe to 90% of what he ever said. Now, I probably use about 4 to 3% of whatever he's used and taught in my own personal trading today. But you can see his fingerprints and his influence over me. And I have still a great deal of respect for him. I'm so thankful that he put his work out there, because he could have just said, fuck all of you, and I'm making my money, and there it is. But it's a lot of money to be made when you're teaching. I've seen that. Lots of money. It's real easy money to do that. But you have to have something that's worth learning and you have to be able to show that it works. And that's one of the wonderful things I get to do with all of you. I show you real time. I call it live. I walk you through it minute by minute, and you see it every single day. But these tools, where he had his Inner Circle workshop, well, like I mentioned in Corb's interview, I've mentioned also in passing when I was on Baby Pips, when they were asking me where to get a name from, that Inner Circle workshop, I was like, shit, I didn't go to that workshop. I wish I could, but I'm going to be the Inner Circle Trader. And now I am. Smart money concepts. Sounds cool, doesn't it? Well, that was inspired by that book written in 1970 by Larry Williams. His smart money tools. His smart money tools: open interest, accumulation distribution, commitment of traders, and premiums. Premiums in the sense that you're looking at the commodity market and you're looking at a normal carrying charge market where the contracts, for instance, like if you're looking at oil, okay, crude oil, you're looking at the nearby contract now, whatever it's trading at. We'll just say, I don't know because I'm not looking at oil. Let's say it's $100. And then the next contract in the future that would be traded when the nearby contract expires, it should be like $102. It should be more money going in the future. But if it ever reverses, that is considered a premium. And it's an inversion of normal carrying charge market pricing for the delivery contract months for a futures contract. And that means there's a real high fevered pitch demand, real demand. So supply and demand does work in that asset class. There's a real supply and demand need for commodities. You need it. You need oil. You need gold. You need grains. You need meats. You need coffee. I don't drink it. It's horrible. But people, they need to have that for their fix and caffeine and shit. So all of that is a real supply and demand asset class. You can measure real supply and demand there. You really can't measure real supply and demand with a share of stock or a currency. There's a synthetic approach to doing it, but it's not the same as seeing it with a market like a commodity market, grains, real tangible things, grocery store items, basically sugar, cocoa, coffee, orange juice, meats, cattle, hogs. I have a lot more tools and concepts than Mr. Williams introduced to the trading universe and community. But I absolutely subscribe to those that he taught, because they are essentially how you can carve out the understanding of real supply and demand in the commodity markets. But I never felt like that was enough. I always wanted to do more. I wanted to over deliver and have an arsenal of weapons. One weapon that was good for when the market's going to reverse and go lower. One weapon that I wanted to use when it's going to reverse and go higher. One weapon when I'm going to trade in a trading range. One weapon when it's going to be an extremely hard, one-directional trending model. Very little retracements. And I set out to look for these things that would repeat over and over and over again. I paid so much money for old data, charts and chart books and things, all kinds of statistical data on every market, everything, palladium, platinum, copper, oats, granola, flaxseed. Those things are very, very thin as a commodity market, but I had all that shit because I was completely immersed in this. I lived in, obviously you can see me, you know, I'm with you every day, more times than I'm sure your own family members are. And I'm constantly pouring into you.
With trading, there's like no barrier to entry. You could download the app on your phone. You could pay for a challenge account.
When something uncomfortable begins to surface. It's not loud, it's not dramatic, and it doesn't come with fireworks or a breakthrough trade that suddenly changes everything. Instead, it arrives slowly. You're sitting there watching the market move, maybe after a win, maybe after a loss, and a realization starts creeping into your mind. Something about the way you've been thinking doesn't quite fit the way the market actually behaves. At first, you push that thought away because deep down, like most traders, you came into this world believing something very simple. You believed that if you studied hard enough, if you found the right strategy, if you discovered the right setup, you could finally reach a place where trading becomes predictable, where you can look at the chart and just times know where you can enter a trade with confidence because you figured it out. You see other traders talk about it. You see people post wins. You hear stories about traders who seem to read the market and naturally your mind forms a conclusion. There must be a way to know what's going to happen next. So you start chasing that feeling. You search for certainty. You test strategies. You add tools. You refine entries. You watch hours of content. And every time you think you're getting close, something happens. A trade that looked perfect fails. A setup that worked 10 times in a row suddenly doesn't work anymore.
for when things should be expected. What happens if you do really, really well? Could you do it sooner? Yes, but that shouldn't be your goal. You should be you're going to do it with these timelines in mind, with the intent that you're going to get good with the proper amount of time to allow you to develop into it. Okay, 10%, Michael, that's a little too much for me now. Give me something more realistic. Okay, let's say it's 3%. A month? Come on, Michael. Seriously, 3%? Dude, that's like your stop loss. Yes, but here's the thing. $250,000, and if you have 3% as your model, you're aiming for 3%. Can you hit 3% in year one per month? At the end of it, yeah, I believe you can. Consistently, probably not every single month, but I think in the same frame of 2.5 to 3 years, I think 3% every single month is absolutely doable. What's the math on that? Well, for $250,000 and you try and get 3%, it's $7,500 per month. So you take that same thing, divide it by 4 weeks. And I know some of you are thinking like, anybody could do this. Is elementary math. Yes, but I want you to think about how you're not. It's so easy, you know the math, but you're fucking still working. Okay, you're still doing fucking oil changes at fucking Jiffy Lube. Okay, and you're going to talk to me in the comment section about how you say this and you say that. Dude, if it's so easy, you do it. You record yourself. You go on Twitter, say what it's going to go to next, and you do it. Okay, and I'm gonna see you fucking flyboys doing that. So you got $7,500 on $2,500 equity. So you funded with $250,000. You're aiming for 3%. Now, some of you are thinking 3%, fuck that, that's not enough. Listen, folks, listen to the matter. $7,500. Are you making $7,500 right now at your job? Does your boss love you so fucking much that they're rewarding you for 40 hours or more a week in the tune of $7,500 a month? Chances are you're fucking not. Okay. Now, some of you probably make more than that. And that's fine. That's great. Well done. You're still a slave. But $7,500, divide that by 4 weeks. It's $1,875 a week. Now, that's not a lot of money. That's not a lot of money. And that's an easy objective to reach, especially if you're working with $250,000. So you do the same thing. You break that up over points. We're doing with the S&P right now. Okay. So if you take $1,875, divide that by $50, that's a point. Okay, or one handle, 4 ticks is one handle or 1 point in the S&P. That's $50. Divide that divide the $1,875 by 50. That means you have to earn a net gain of 37.5 handles or points for the week. What? How am I going to do that? Well, per day, it's only 7.5 points. That's easy as shit. That's fucking easy. Now, you split that day of 7.5 points into 2 sessions. You have the morning session, you have the afternoon session, divide it into lunch. You take a lunch hour, go play some PlayStation, Xbox, take a nap, whatever, come back at 1:30 and work till 4 o'clock and aim for what? The same thing you try to do in the morning. You got 7.5 points that you got to make. That's your goal. That's all you're aiming for the day. You try to get 3.75 handles. That's 1 tick less than 4 handles in the morning and in the afternoon. So aim for 4 handles in the morning, aim for 4 handles in the afternoon, and that covers your commission costs. And you'll net 3.75 handles. You do that every single day, or if you're a swing trader and you say, I can see something on the hourly chart that's going to probably move 40 handles, well, then you just do 1 trade and you're done. But you can split this up into small, little, tiny, bite-sized pieces. And if you've watched what I've been doing and you think that 4 handles is hard, you haven't been watching enough of my videos. You haven't been watching enough of my executions. 4 handles is nothing. Like 4 handles, that can happen in less than 5 minutes, 2 minutes. Like in some instances, a one minute candle, it can do 5 handles because I'm taking you into the time when the market's likely to move like that, aiming for a direction or a bias that's attacking pool of liquidity or aiming for an inefficiency. You're not looking at indicators, you're looking at shit that repeats over and over again. So you could be taking that $250,000 account and parlaying that up to $7,500 a month, doing, around $80-some thousand a year, not doing very much to do it. It's all about how you understand what repeats. I'm showing you these small little movements intraday, because when you look at all the social media stuff, they all show you these big, massive runs in price that they just got lucky with. I'm showing you week after week, day after day, 100 handle moves, 50 handle moves, 30 handle moves. And I'm talking to you right now about 4 handles. That's 1 less than the 5 handle model that my son uses. 4 handles, folks. That's easy. That's so easy. It's insane. And you can do just 1-to-1 gearing and it's done. You're trying to make 3% per month on $250,000. What happens if you do that same thing each month with that same $250,000 account and you let 3% compound over and over and over again? You're making 6 figures. You're not over leveraging ever. You're never going to blow the account. You're never going to wreck yourself. And you're never aiming for something that's too hard or anxiety inducing. 6% per month doubles your account size, no matter how you slice it. No matter what you start with, at the end of the entire year, if you compound 6% every single month, it's 100% return. You have $1 million account that you funded with? Okay. Aim for 6%. Oh, but ICT. Oh, ICT shit. Okay. It's this math and sticking to the same multiplier. What's the multiplier? How do you get those 4 points? I know what you're thinking. Like, okay, this sounds all easy now. Now tell us, how do we get those 4 handles? How do we get those 4 points? What have I been showing you? Aim for something. What's it reaching for? A pool of liquidity. Bias has nothing to do with it. Where is it at right now? Turn your charts on at 10 o'clock tomorrow. You're not trading. This is going to be a preview for the next week. You do not turn your charts on until 10 o'clock in the morning, New York local time. Find the most recent 5 or 15-minute high or low. What's the market done since the opening? And then aim for that. See which side's been ran out initially. If they've taken out the lows and it's been run up and it's created a short-term high and it's retraced, it's chances are it's going to do what? Run that. Then you execute in your, not your demo, in your observance of watching price. You're going to tape read that. Well, what am I looking for? A fair value gap on a 1-minute chart. It will be there. That's the wonderful thing that you're going to discover, because all this stuff repeats on all these time frames. You watch me do a 10-second trade on Nasdaq today, and yeah, it repeats over and over again on all time frames, because price is price, and price is not really referring to the things I'm showing you in charts. That's the language I've used to bridge your understanding and what you don't and won't know about the algorithm. See, there's a difference between people that will say with harmonic bullshit, okay, and retail logic splattered all over their chart and say that's what the banks use. This is the algorithm. No, that's not. That's retail bullshit. And that's why it's failing you and you're blowing out publicly. And I'm showing every single day precision at work. Now, you don't have to like me, okay? We don't have to be friends at the end of this year, okay? But give me the opportunity to make you into a fucking beast, okay? I don't give a shit what you think about me as a person. I don't give a shit if you like my personality. I don't think that even matters, okay? But I am so ready. I am so ready to transform all of you. But you have to be here. You have to show up and you have to engage. Look at the shit and forget all the other shit you think you know. Put it all down. You'll believe me. I guarantee you, you will see right away there's something totally different when we're watching real-time price action, because it's going to be a plain, simple chart. And you're going to watch these candles paint, and they're going to communicate with one another. They're going to react to one another, and they're going to live and breathe and move across the chart in a way that's going to make perfect sense. After several months of doing it, you're going to know exactly what it's doing without me saying it. And when you start hearing me say exactly what you're thinking, you understand exactly how to read the tape. You have been at that set that I can't write down in a book. I can't make a video for you, because that's what you want. You want these 5-minute trainers, learn ICT concepts in 5 fucking minutes. Man, seriously, you can't. My shit's been out there since last year, okay? I want to see these individuals that are saying they can do it in 5 minutes, and these 5-minute video trainers go out and trade it live. Go out there on Twitter like I'm doing, call the level it's going to be traded to next, and then record yourself doing a precision entry with a stop loss and targets being filled. Stop making 5-minute bullshit, okay? You can't learn this in 5 minutes. I can't compress 3 decades into fucking a year. I couldn't do it. It took several years to get it this far. It's just so, it's deep. It's very, very deep. And you can go really, really, really far. You're learning with this and become a freak with it, like I am. Like, it's, to me, it's amazing. I love it. But you don't need to be like this to make money. You can just do what I showed you last year, and that's it. That's beautiful. You can make all kinds of money with that. But what repeats every single day, that these folks that will tell you don't have a goal, don't have a fucking goal, don't have a percentage return, because math doesn't matter. And the logic they use in trading is flawed. So it makes perfect sense. They'll argue and say, oh, they're going to show you a spreadsheet and they're going to pull up a calculator and they're going to do this and going to do that. But they're not going to be able to do it because this, that, and the other thing. Now, bullshit. I'm already showing you. I'm bringing the receipts that I can read this shit real time on any fucking time frame. Any time frame. I showed you with the daily chart. I showed you with the weekly chart. I showed you with the 4-hour chart, the hourly chart, the 50-minute chart, the 5-minute chart, the 1-minute chart, the fucking second charts. 10 seconds now, folks. 10 fucking seconds. Do I got to do it with 1-second charts? Because I'll fucking do it next week too. And you still will see that because they can't do it. Fuck them. They don't matter. They don't matter. They cannot hold you back, but you're going to let them. Some of you will let that bullshit creep into your head. And you will ignore the fucking evidence that I'm proving and showing and giving you a testimony every single fucking day. Here it is. It's right here again. Here it is. Here it is. Take your attention to this chart. Look at that calendar there. It's going to go here. It's going to go there. You have to have a target. You have to. If you have no target, how the fuck can you measure your progress? Are you hitting the mark every single time you aim for it? How can you realistically gauge progress and development? You're going to be spinning your wheels, which is exactly why this fucking industry has break even to blowout. 90% club. First 3 months, that's exactly what happens. How many times have you seen me get it wrong? Yeah, how about that? I'm publicly doing it. I'm pointing to it. I'm calling it. I'm recording myself doing it. How the fuck can I cherry pick it? I've already co-signed where it's going. You know where I'm aiming for. You know the logic I use for trades. My trades are one-sided. If you can paint the direction on both sides, that's not high probability. I wouldn't be in that fucking move. So you take that logic of knowing what we're looking for. The multiplier is your setup, your model, the thing that you trade over and over again. You don't give a shit about anybody else's pattern. You don't care what ICT's fucking trading. You don't know what anybody else in the community is doing. You don't give two shits what they're doing. You found your setup, your model. What does that look like? Well, I just showed you one the other day. I gave you a breaker that I thought was going to be, something I can watch and see it melt down. If it would have broke through, then I would have used a fair value gap and I would have done something with that trade. But I told you the waiting, I saw what I was looking for wasn't going to pan out. And if I have a time limit or a filter on saying I can't engage at 9:30, I got to wait. I can't get in ahead of 9:30. I have to wait. Why? PAL. And we are 2 days away from CPI. And it's treated much like what? Non-farm payroll. So you have to be very, very diligent about keeping your level of frequency and trade and engagement limited. Be very, very selective on what you're trying to do, because these market conditions you watch today is generally what you see coming into CPI. Big money starts sitting still and the algorithm will paint sideways, run small little shallow runs above highs and lows intraday, and just look aimless like euro dollar. It's still doing something, 2, 3, 4, 5 handle, pip moves, but that's not what I want to be trading. Can I go in there and do that just to prove it to you? Yes, but I want to teach you the right way of looking at a market that's really moving. That's where I'm taking your attention, and I've been there for months. That's index futures right now. And Forex might get crazy again. And if it does, I'll migrate right back over to Forex. But right now, the risk is too high for what it's giving out. No, thank you. So if you're looking at a pattern like I was explaining, if I'm looking at something that's not doing it, if it's resisting it, then it's going to be a fade for me. And I'll immediately override that waiting 15 minutes and buy it and accumulate my position in that breaker that would otherwise be what? A premium array that I would go short on. If it's rejecting that, it's saying, no, I'm not doing that, then I have to do what? I have to concede and say, okay, I was wrong in my analysis by having that on my chart. And then I have to do what? Either make the decision to do nothing, stand on the sidelines, or reverse. So that's what I did. I went in, I built up and accumulated a long position inside that breaker, showed you the balanced price range. My stop loss was not going to be affected by it. And trust me, my ego loves the fact that you're all astounded by that. But I have so much other shit that you're going to see this year that it's going to make that look like nothing. Okay, that's nothing. You're entertained by that. And that to me is fucking crazy, because I am going to show you shit that Tony Stark's going to wish he fucking had his hands on. Nobody has the shit that I'm bringing this year. And I'm going to dazzle your ass. And it's going to be so much fun. It's going to be, like I said, my victory lap. And I'm going to be waving as I go out in December. All the receipts will be there, and you'll have all the experience walking with it. You saw me reach for a target, simple little fib projections and time. That's all that was. And I was 1/4 of a point, one tick off the high. And that pisses me off. because I thought for sure I was going to nail the actual high, and I was off by one tick. And then it collapsed and went back down into take out the low, which I said was the balanced price range, which you're probably wondering, okay, how did I know it was a balanced price range that later on became a range that could have been taken out? Everything I just outlined. If it looks like a sell and it's setting up a sell and it's rejecting it, then it's going to do one of two things: go consolidation, which I didn't see that happening. Because why? Pal, the effect of him talking. Traders are going to be reading into that bullshit. I don't even know what the hell this guy says. I don't ever care what he's saying. I don't care. I don't ever read those fundamental data. I don't read any of the reports. I could give two shits about what they'd say. I don't care about that stuff because price is going to tell me everything, because price is manipulating the minds and influencing all the decisions in every trader around the world that doesn't know what the fuck they're doing. And that's how I was able to look at something. I was ready to do something. And I was like, nope, that's not happening. Reverse is going up. And then boom, there it was. Went back into the new week gap opening. I said, I want to take 10 off there. You saw me do that. And at that high of the gap, I took something off there. And as it ran up, it had a nice expansion on the upside through that gap opening on Sunday's opening. I took another portion off, and then you watched me run right into the target. Only off by one tick. Folks, that's not luck. That's not luck. That's logic. It's not rooted on any horse shit out there. Nothing. John Murphy don't have it in his books. Everybody else out there talking horse shit. Nothing. It's just simple understanding of time and price and understanding market sentiment. You'll learn about that this year. I'm going to be talking about it every single day. I'm going to be talking about where retail will see the marketplace and where those instances are where retail is arm wrestling smart money. We are looking for those points right then and there. That's when our high probability setups are occurring. That's your multiplier. That's your pattern. That's the thing that you're going to do every single time you go in there and look for a trade. That's what you hunt. If it's not there, guess what you're doing? Nothing. And you're not going to regret it. You're not going to feel anxious. You're not going to fear missing out on something, because who gives a shit somebody's trading a breaker over there? Who gives a shit they're over there trading an institutional order flow entry drill over there? Who cares if they're trading in a market maker buy model when you're selling short, you're looking to sell short? Who gives a shit? That's not your trade. That's not your trade. That's equivalent to seeing somebody else's significant other and saying, wow, I'd like to get a hold of that. But you're married to somebody else. You can't do that. I mean, I guess you could do it and get yourself in trouble. But the point is in trading, you don't want to do that. You cannot do that. You got to stick to what you are married to. And that's your model. That's your market. That's your multiplier. The thing that you're going to do over and over and over again. And that is going to be multiplied with the heavy lifting of money management. Because if you're aiming for 3% or 10% or 6%, that's a static return that you're aiming for every single month. Your risk need not be high to meet these thresholds in terms of returns. Not even 1%. How about 0.75%? What if you risked 0.7, less than 1% risk? And nobody writes books about this shit. Nobody makes videos on YouTube about this stuff. Nobody makes courses. They don't teach their shit with this logic. Okay. But if you're going to have the advantage of having funded account balances, which you really don't have, but they're going to offer you that, and you're able to take money out like you see my students all around the world doing now, I promise you they're still trading way beyond where they should, because they want these big windfall victories. You don't want that. Not when you first start out. You don't. As much as you want to believe you want it, you don't want that. You want this shit to be steady Eddie, easy money. Something that's easy to do over and over and over again. You're not trying to flip your fucking account. You're trying to take money out of it. Every single opportunity that you can take the money out and they allow you to do a payout, you do it. But what I want to let it grow. Fuck that. How do you know this company's going to be existing 6 months from now? And what if you work that account up and you build it up and you build it up and you build it up, and all of a sudden regulation steps in and says, yeah, we're going to change the way this is being done. You don't think it can happen? Nothing would surprise me anymore. Nothing would. So as you make the money, you get the fucking money. You secure the bag, you pay your fucking bills, you get your ends meet, and there you go. You save some money up and get your own account. You have to have multiple streams of income. One stream of income isn't going to be it. I'm a millionaire and I still have multiple streams of income. I'm not going to bed at night sleeping about who's going to watch my fucking videos. Okay. I'm not worried about, am I going to be able to get a trade tomorrow? I'm not worried about ever doing a mentorship ever again. Think, folks, if you're worrying about money, you have a full-time job in fear and it doesn't pay well. It gives you ulcers. It gives you stress. It's toxic. It makes you miserable to be around. And I'm telling you how to change all that. Because if you don't change that mindset and start seeing how this is obtainable, your model need not be complicated. Even though you might look at what I'm teaching and see how intricate it could be and sophisticated in many ways, it need not be that way for you. Look what I've been able to do with last year's model. And you can simplify everything that I teach just like that. And like I said, I'm going to literally teach you late entries after a move already started. I'm going to show you how to enter doing that. And it will still beat your fucking job easily. And you need not be afraid. I'm going to show you how it's not chasing price. I'm going to show you the contrast of what chasing price is and when it's not chasing price, but still offers you a low risk, high probability entry. Folks, listen, there is no excuse this year. You have no excuse. Zero. The only excuse you have is you didn't show up every day. And then there it is. I guess that's it. But if you show up every day, you have no excuse. I'm going to lay it in your hands. You're going to handle it. You're going to see it. You're going to feel it. You're going to experience every aspect of seeing when the market's going to do this and when it's going to do that and when it's likely to fail. And you're going to see me get it wrong and how I'm going to engage it. You begged and pleaded and begged and pleaded, and now I'm going to give it to you. So there's going to be a lot of folks out there just want to watch and see if I get it wrong. That's fine. I want you to go into this with the intent that you're learning how to do this. And you're also going to see how often I get wrong. How often do I get it right? How often and how precise is what I'm going to show you and where the market goes? That can't be faked. And there will be no other recourse for anybody else to say, well, it's luck or it's cherry picked. How can I transfer cherry picking logic? People out there are doing it. They're making money. So how can anyone argue against this when you are going to get a free ride for the whole year with good old ICT? The benefits of knowing what your multiplier is and your model is that you will know exactly what you as the trader are going to do. You're not trying to keep up with somebody else on social media. You're not trying to keep up with me. You're not trying to win some kind of bullshit contest. You're in here trying to make money. That's it. That's all this boils down to. Making money and enjoying it and having fun. Making money doesn't need to be fucking boring and stuffy, but it needs to be easy. Because if it's not easy, you're not going to stick with it. Because if it's easy, you'll be able to do what? You'll be able to weather doing it wrong once in a while. Oh, okay, shit. You know, I did that wrong. Okay, it's no big deal. Why should you be carefree and lighthearted about taking a loss? Because your model, your multiplier, will still fucking work. You just did something erroneous. You watched me do it today. I could have kept that from you today. When I was closing, I was next to my son. I said, okay, look, Dad's going to short this here in a really sloppy, ugly range. I said, go through all those candles. What do you see? He goes, I see that fair value gap, Dad. I said, that's what I'm aiming for. I'm looking through all those fucking ugly candles and I'm looking right there because that's exactly what the algorithm sees. It's not looking at every single one of those individual 1 minute candles. It's looking at what? That fair value gap. And it's going to go back to it, return, back to it, return, back to it, return. And then it's going to do what? It's going to reprice lower to that fair value gap that's shaded in blue. I had 6 on and I took 3 off as I was telling my son, now watch this, Caden. It's going to go below here and Dad's going to take off 3 below that. And it just started shooting down real quick. By the time I had the line drop, I said, okay, let me just hit it. And then I put my thumb over top because it's a touchscreen laptop. And yes, I use a laptop when I'm on the internet. Whenever I'm doing anything with YouTube, I'm on that. My screens are on a different ISP. I let nobody's sharing my ISP. I never send emails through that. Nothing is linked to any of my account holding computers. None of that shit is like that. So yes, I use a laptop and my screen's touchscreen and I had my thumb on the upper left-hand corner on the hot buttons for buying back the short. So when I tapped the first time, it was already set to cover 3 of them. And then I hit it again and covered it. And then I was moving the screen and then I bumping it one more time. And it ended up putting me long 3 contracts. So I turned to my son and I said, okay, look what Dad just did. I'm in the position, covering it, and then I hit it one more time. So right now, if it keeps going down, Dad will lose. So I have to do what? How do I fix this? So you're watching a sped up version of it, but I'm giving you the dialogue of what I was telling you at the time. I type it out for you in the recording nonetheless. But I said, right now, I'm net long in a position, but by error. I'm not trying to profit, but I've done something as a human that was not correct. So I saw this a couple times in the tweets too. They're like, but you just got done telling us if it was a mistake, we should get out right away. Yes, that's you. You don't know anything. So to keep the market from crushing you or beating you up and making you feel like a fool, I've done this a little bit. I've been to this rodeo a couple times, so I know what it feels like to be doing it. And if I make an error like that, if it's feasible for me to do it, I will fancy dance and finesse my exit to cover the costs. Now, I've done that before and it has handed me my ass. Now don't get it wrong, okay, because I've done this and it's been ugly. But because I'm ICT and I got a little bit of a fucking ego, I'm going to show you, and like I showed my son, that's usually what I'll try to do. Unless it's really a fast market, which it wasn't today. It was just a really, choppy, just doing the normal bullshit of a consolidation market. So I felt pretty confident that the bottom end of that fair value gap wouldn't be pierced, and it would allow me to go back up and allow me to get out of that. And you watch me do it. So there's a distinction and also a context applied to, yes, I can trade outside of what I taught in last year's model. Yes, I can trade outside of kill zones. Yes, I can trade outside the times I've given you. Well, I want you to do that. Look, I want you to learn what I taught. How's that work? Okay. I'm not obligated to dance for you, but if you're here to learn, how about working within the rules I've outlined for you instead of trying to color outside the lines like I do? I can use that model, but I want to broaden your expectations as a developing student where you're not limited to just that. I want you to have a more independent mindset where you're not trapped into one mold. That model that I gave last year is beautiful. It's perfect. It's nothing needed in it. It's so perfect, but it's not enough for me because I am a nut with this shit. Like, I want to be everywhere. I want to be everywhere in everything because I'm obsessive. I can't fix that part of me. So don't get mad because I can go in there and do other shit. I'm not trying to distract you or derail you from following what I put out last year. Some of these people that have gone through and found profitability, they don't give a fuck what I'm teaching from now on. They don't care. They'll watch it for entertainment value, but they're not getting changed from what they're doing right now. They know they found their shit. That's their multiplier. That's their model. That's the thing they're going to use to make money. They're not going to deviate from that. They don't give a shit who's coming out with something new. They know exactly how they're making money. They know their way to work and they know their way home. That's what you're looking for. And for some of you, it might be a forced engagement outside of the times that I've given you. You have a job. Okay. You're going to have to get up a little bit earlier. That doesn't necessarily mean you got to trade in London. It just means you might have to do something a little bit earlier. And guess what? 4 to 5 handles can be found before 8:30. It's simple stuff, folks. But will you be able to trade the entire daily range if you're trading before 8:30? Probably not, because you're trading ahead of the manipulation. So you can't be in traffic driving during 8:30. And if you're in traffic, there's an accident and now you're looking at the marketplace and all of a sudden your phone doesn't have connection and you can't get to your broker to get out of the trade. Yeah, you don't want to be in that situation. So you're going to have to find a way to engage or you simply can't trade. And for some of you, that's going to be a brick wall that you don't want to engage or meet and come to terms with. But you're going to have to make changes in your life. Some of you will have to do that to be able to do this for a living. And there's no way around it unless you're trading a daily chart, which you can. You're going to have really wide stops, really, really, really small positions, and takes forever for your trades to pan out, but it can still be done. You can make 3% using a daily chart, never even trading a lower time frame. There's nothing says that can't be done. It can. I personally can't do that because, well, look, today, I can look at a 10-second chart and see dozens of trades inside of 3 hours. I could be in there, firing them off, boom, 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 Tommy gunning it, just laying it out there and have a field day, which is exactly what I was doing with those MT4 accounts. Everybody claims was what? MT4 server. That's some bullshit. Look what I'm doing on TradingView with a 10-second chart. That's the same shit I was doing, using my charts to the MT4, seeing my charts and then timing it with the MT4 platform. So when I was running up those $1 million accounts, nothing was done with trickery. Every single position that I did a new pyramid in, I was risking 4, sometimes 5% on every new position. If you're drilling it that hard and you keep building and building and building and building, it doesn't take long to build that up, folks. It does not take long to do that, but you have to know what the fuck you're doing. And over a course of a month and 2 months, 3 months, shit, it's just math. It's just math. But for some of you out there, especially Goldman Sachs alumni, you couldn't accept it. Too fucking bad. Sucks to be you. But you're all going to get a taste of all that fun stuff this year. You're going to have all kinds of fun with ICT live. And when you have all this information in front of you, at the end of this year, all the things you're going to look back and say, these are the questions I had that I thought that were paramount. And they were hindering my learning when they should have never been a cause for concern.
The author of one of the best-selling books on trading psychology with more than 20 years of coaching experience.
The idea is not to eliminate the emotions.
Generally, from the open at midnight to the high of the day, it's usually within 30 pips that it makes the high of the day. Sometimes, in some weird instances, it'll go as much as 40 pips. Why 40? Because sometimes you'll cross and breach a big figure number, for instance, a 0-0 level. Okay. And if that's the case, the algorithm can many times spool or spread beyond a particular level, run past it, in other words, as much as 40 points or 40 pips. So that's why I use 40 pips as a general rule. And if it goes beyond 40 pips, then it's probably not going to be a sell-off. It's probably going to keep going higher. Or it means I need to sit on my hands and do shit. Nothing. Just go back to bed. And then I'll trade the New York session. Okay, so I just tossed it in there, no extra charge. If we are expecting something bullish, our weekly analysis indicates that we're in a buy model. There's a high impact or medium impact news driver coming out at 8:30 or so in the New York session, all New York local time. Everything is always New York local time. Stop trying to take your shit in your chart and line up to your local time because it makes sense to you. Everything in these markets are always going to be on Eastern time. So once you have that, you're waiting for price to either drop down, no more than 40 pips, down to a low. But if it runs down below a low that's lower than 40 pips, you don't do anything. You leave it alone. You wait. Just let that go. But if there's a low that say it's at 40 pips, lower than the market price, before that news driver comes out at 8:30, you look inside that low to where the market price is now. There should be a price leg that has moved up. Is there a fair value gap in that? If there is, then you're anticipating now that the market drops down into that fair value gap and not below the low. Now, here is that point of contention that every student of mine has, even private mentorship students. They want the silver bullet answer that says, okay, here we are. We're at the brass tacks. This is where the rubber meets the road. ICT, lay it on me, baby. This is it. Hear that? That's excitement in your voice. You're talking to yourself, and I'm not in the room with you. How do I know, ICT, that I can buy that fair value gap and it won't go below the low? Are you ready for this one? Ready? You got your pen and your paper? Write down this. I don't fucking know. You don't know. That's why you put a stop loss there. Are you fucking kidding me? Yeah, that's it. But what happens if it goes down there and I get stopped out? What you do is you wait for it to create a short-term high. And then if it goes back below that short-term high, that's a shift in market structure. Wait for another fair value gap. Then you buy that one with half the risk that you lost on the first trade. If you lose on that one, you're done for the day. Done. How's that fucking complicated? It's liberating. You don't have to know. But if it does happen to you adversely, you know what you're going to do. And if it happens again as an adverse effect and you lose, you're done. You're fucking turning the charts off. You're done. That's your morning routine. You're done. You did your 2 trades. You've lost on both of them. You're done. Or the second one wins and you recuperate some of the drawdown, if not all of it, and maybe go into profit. That's the part that's going to separate all of you from the people that stick with this. Because if you can't accept the fact that you're probably going to lose and it won't change anything, it just takes a little bit away from you. Just like it takes away from your fucking gas tank when you drive to your fucking slave job. Okay? It costs you money to go to work, but you don't ever look at it like that. It costs you toll money to get to work, but you don't look at it like that. That's a fucking loss, okay? Your stop loss is getting hit every fucking day. As soon as you start that car up and you're driving down the fucking road, your stops are getting hit. It's costing you fucking money. You gotta replace a fucking tire. You gotta replace your tires. You gotta change your fucking oil. Guess what? That's drawdown, baby. It's all about perception. You're running around with blinders on. You can't do this and not lose money. You're gonna lose money. But you have to manage effectively how you lose it and come back from it. So you're going to do one of those two things. You're going to look for a swing low. Now, if it's less than preferably 30 pips, that swing low on the hypothetical example of pound dollar, I would, even if it had a fair value gap, I would give it the likelihood or the opportunity to trade below that low, especially if it's a high impact news driver. I would look for it to potentially run that low. But if we trade down to the fair value gap in that low, if it's less than 30 pips, I sacrifice that entry that would have been at the fair value gap because I'm waiting to see if it wants to take the low out. If it takes no interest in going below that low and it reacts at the fair value gap, then what I'll do is I'll buy the next down close candle as an order block. That's it. Isn't that straight to the fucking point, folks? Okay? You young guys, get to the fucking point. You can't get any more to the fucking point than I'm doing right now. I'm literally giving you it the step by fucking step, and you're still gonna fucking complain. Whatever. So what you're doing is you're determining if you're bullish in a buy model, you're expanding higher on the weekly candle, you're waiting for opposing price direction at the time of the news driver being released. Okay, so whatever, like an employment number or an economic number that comes out, you're expecting the algorithm to reprice lower, and that's going to get all the retail traders wanting to go short. That's exactly what you want. That is the green light go you're looking for. You want to see something opposed to what you think the weekly candle is going to do at that time of that report. That's manipulation. That's the trick. That's the broken wing trick that the robin does to protect its little fledgling that's trying to teach how to fly. You ever seen that, a robin on the ground? And you see it, it sees you before you see it, and it starts chirping real loud, and it starts putting its wing out to the side like it's broke, and because it wants you to chase it. And once you get close to it, that fucking wing's perfect. It flies away and it's laughing at you. But you don't see the baby it's distracted you from. Well, the market does that same kind of thing. That's a Judas swing. It leads you down the primrose lane. It makes you think you're seeing something that's valid, but it's not.